low right now, 82 versus the dollar for the first time. There are many export companies that perhaps could get impacted. Let's find out. Aether Industries is one company that saw a 7% up move yesterday. This is a company that gets its big chunk of its revenues, around 70% from exports itself. So to discuss how exports are looking and to get a sense of the demand situation, Aman Desai, the founder and director at Aether Industries, joins us now to talk about that. Aman, thanks a lot for joining in. You have 70% of your business that comes from exports. Just wanted to know, what is the split between US and Europe? And is there any impact that your business would see because of the way the rupee has slid?
Yeah, thanks, Sonia, for having me here again. Pleasure to be here. Yes, the rupee is faring badly, but in terms of the exports that we have, Europe is the larger chunk, I believe, about 70%. If we count the deemed export and the SEZ sales into India, which is on dollar invoicing, that is about 20% of the 70%. So of the 50%, I believe 30% probably is in Europe, and the remaining is worldwide, including the US. And to answer the second part of your question, we are not seeing any adverse effect on the business and the opportunities coming in. Rather, it is to the contrary. We are seeing a tremendous influx of opportunities, especially in the contract research, contract manufacturing space, where we see a lot of inquiries coming in from the Europe and US. And the dollar being strong in a way helps us because it's more revenues for the company then.
Right. Aman, just in an interview, I think about a week and a half back, you said that you're seeing tremendous capex going on right now, especially out of Europe because of what's happening there specifically, and that is a region which is attracting more and more inquiries, as you just outlined. Could you give us some sense and scale of what's happening there, and how big a trigger could that be if industries remain unviable because of high energy costs there for a business like yours?
Yeah, Prashant, great question. Yes, we are seeing a tremendous influx of opportunities from the European space. In terms of the capex, I was talking more about the capex of the specialty chemical industries that are happening in India, including us. A lot of companies are putting in a lot of steel on the ground and putting in a lot of projects in place and going through a lot of capex currently and upgrading themselves and designing themselves to become ready for catering to this increased demand from overseas. And Europe is interesting to see how this plays out. Hopefully the war will end soon, and the scenarios will become better for the world. But in terms of the current scenario that is existing in Europe, in terms of the energy crisis and the gas prices going up and the costs going up, we are seeing an influx of opportunities related to this scenario currently, where companies are telling us that they are kind of evaluating outsourcing research and development and scale up and manufacturing opportunities to us because of the current crisis that is going on. And once this shift happens, that it's more or less irreversible. It will not go back. And so you will see more opportunities coming into India. Currently, to us, we see that, and to the rest of the specialty chemical industry in India also, I'm sure they're seeing that, and that's a good thing.
Okay, hi Aman, morning. So you're saying demand is strong. You have a lot of opportunity out there in the global markets as well as India, and demand is pretty strong. But the focal point is the rupee. So let's get a couple of numbers out of the way then. We know exports is close to around 70% of your business. How much of those exports are dollar denominated? Irrespective of where it's sold, how much of it is dollar denominated? And also, you'll be sourcing raw materials from various parts of the world. How much of that as well is dollar denominated? What I'm trying to understand is, a weaker rupee, net, is it positive for your business? Go ahead.
Yeah, so Nigel, great question. And I might be a little bit weak on these numbers, but let me give you an idea. 70% exports, I believe 95% of that is dollar denominated. And so 95%, so almost all of our exports is dollar invoiced. And in terms of the imports that we have coming in from Europe and Japan and China in terms of raw materials, I don't think it's more than 25 to 30% of our net raw materials are imported, and these are dollar invoicing as well. And so, as you can see from these numbers, obviously the raw material costs are much lower than our selling invoicing numbers. And so there's a natural hedge that we have. We are not very much dependent on imports of raw materials for our raw materials. And so there's a natural hedge that we enjoy in terms of the dollar being strong, and net, it's a significant betterment in our numbers because of the dollars not doing so well.
Aman, if things stay the way they are, then there's a bit of a tailwind for your business because of the weaker rupee, say in the second half of this year?
Yes, you could say that, and that applies the same for other specialty chemicals industries in India as well, who are currently enjoying the export business. But yes, absolutely, we will see a reasonable uplift in the numbers of our company in the later half of this year.
Okay, so on the top line, can you give us some numbers? You ended FY22 with a strong 30% growth, and you were just telling us there's a big capex that the specialty chemical sector is seeing. You're seeing a lot of inquiries in the contract manufacturing space as well. Where do you think you can end the year, FY24, and perhaps what could the compounded growth be over the next 2 years?
So we will see a reasonable growth in this year. The first couple of quarters have been a little soft because of the global softening of the pharmaceutical market, and more than 50% of our revenues are derived from the pharmaceutical industry. And so the first couple of quarters have been soft, but we do have the Site 3, the new greenfield manufacturing site, coming online, and it's on track and on schedule to be launched in December this year. And so the last quarter of this fiscal year, we will see revenue inputs from the new greenfield manufacturing site. The dollar will help us. The CRAMS opportunities are increasing. And so in terms of the CRAMS business model, which is about 12% of our overall revenues, a 70% EBITDA margin product, we will see improvement in the numbers of this.
Could you give us a number on CRAMS? Where is it headed, Aman? From 12%, where is it headed?
So to give you an example, the entire last fiscal year, our CRAMS was 50 crores of revenue, which is 70% EBITDA margins. The first quarter of this year itself, we hit 20 crores. This current quarter, we'll be hitting 20 crores as well. And so we'll be looking at almost 70 to 75% increase in the CRAMS revenues in this year as compared to the last fiscal year. And keep in mind that these are pipeline molecules and launch molecules that we are working with innovator companies across the industry spectrum, across the globe. And these will go into manufacturing over the horizon of between 2 to 5 years. Okay. And when these molecules go into manufacturing, it will be a very interesting scenario for the company.
All right, Aman, we've got a few numbers from you to understand business on the whole. Post your numbers, you could join back in, and then, we could quiz you a little bit more. But we get the gist. Weaker rupee, good for you. Tremendous potential, and CRAMS business surging higher from here on. Good speaking to you. Well, let's get back to the markets then. And Sona, you're tracking a report that came in from Jefferies on autos. You're sounding fairly bullish.
There's a big upgrade actually that has come in from Jefferies on the auto sector, and they say that they expect a very strong 17 to 19% compounded volume growth across the board for passenger vehicles, two-wheelers and trucks over FY22 to 25. Falling metal prices will also help lift margins, and they expect a double-digit earnings growth for most OEMs across the board. Their preferred buys, Jefferies, is TVS Motor, Maruti, Eicher and Tata Motors. They haven't underperformed on Motherson and Bharat Forge, and they have upgraded Hero MotoCorp to a buy with a target price of 3,000. So that's a big upgrade coming in on the entire auto pack from Jefferies. But keep in mind that a lot of these stocks have already had a big rally recently. But Titan is the other one on our radar. Big move this morning on the upside. Mangalam has more on that. Mangalam, people buying more jewelry.
People buying more jewelry, and that too in lean periods. So one can only